Hey traders, Jeff coming to you here, Full Throttle Traders, April 1st, 2025. I want to walk you through how we nailed some day trades today. In that the market was pretty docile here. $2 up, $5 down, 12 bucks up, $8 down, $6 up. Crazy in the market. But we found two specifics here. Watch this, learn from this. This is 25 years of doing this, and some of the things you need to be looking out for to help you select those right stocks. That's rule number one, find the right stuff to get on board. Hang with me and I'll go through this. All right, so let's take a look here at our J&J trade in here to kind of show you the dynamics of what happened in this particular trade and how we use some of the specifics in sectors to help identify the trade. Number one, you got to have a good trade, right? You got to have something you really look at, you can count on in here. And when I looked at the biotechs, they were definitely drawing down. The last couple of days, as a matter of fact, some pretty big drawdowns in the biotech. You can look at Merck, MRK today, Pfizer. Most drug makers were definitely struggling today. And the market ended up being very good for a lot of the day, did not help the biotech. So this was on our gap list, but we were also scanning and found at the top of many lists in here. J&J was one of those plays where we saw the play. We knew that it was gapping down under a green bar. Yes, it had a little bit of tail. We don't like to see that much of that, but gapping under multiple days into an area of void. XBI definitely head lower, plenty of void on the 65-minute chart. When we saw the trade, we're sitting about right here. My concern, I told the members, was this, that look, we're going to be coming down to the 50-period moving average. That may kind of stymie the move. More importantly, the flat 200 on the daily chart could really stymie the move. Interestingly enough, our target was down here, but when I see something like that, I immediately move my target above here. So number one, we found the trade, we entered the trade, we identified our target, which is typically 4R. When 4R is below an area in the chart, either support, resistance, supply, demand, or in this case, a flat 200 on the daily chart is good enough for me. I move my target up just above the 200. Now, today, we didn't need to. Ultimately, it went straight through it. Rare day on J&J. This is one onslaught here of about $8 on volume here. I can't look back for a few years and see a day like this on Johnson & Johnson stock here. It wasn't even earnings, just selling off the biotechs. Anyway, but this is where we entered on the trade back here. We looked in here, we saw it struggling here. The key is, though, I didn't use this area. If you look up in here, I could have very easily went under 158.40 and put a stop at around 160. $1.60 off. The problem was I'd be only 1 hour to here. If you want to make money, you're going to have to risk that stop a little bit in here. So here's how I monitor that. I go in half risk. I look for much bigger moves. In this case, 4R, it actually went about 7, but looking for at least a 4R move. Once we got in mechanically, this is what I follow. One of the things we talk about with the room members in here, I'm in the play. I don't do anything on this side until after 10. This is the side I work with. These are 1R go break even, 1R take half, 4R take the money. The problem was 4R was below the 200, like I said, so I took it right down in here at 157, 156.90 to get out right here. We got the bulk of the day move, rallied back up to about 23% fib level, struggled at Fibonacci, it came back down to 153. So at the end of the day, it's better to hold it here, but remember, 9 out of 10 trades won't do this. Runs 5 times, 6 times ATR. 1 out of 10 trades do this. So I had to bet that this is one of the ones. It was one of the ones that went, but we made a nice bank on this. So number one, identify your market. What do we have here on the daily chart? You can even look at the weekly chart. In this case, it wasn't so much that we just a daily chart. We saw the void in there. 65-minute chart. We found our entry in here, and we got in. And I just went on to the next trade, looking for something else. Why? Because I had a mechanical in place. I knew exactly what I was going to do. I don't sweat around should I or shouldn't I. I put in here, I put my stop, and then I use some trail methods. I won't cover all that in here, but I talk about that along and update our team members with those trails. If in fact we do trail, I'll use a 5-minute variation of that. But bottom line is, once I'm in the trade, once I get a half bar, that trade's behind me. I look for taking 1, 2, or 3 of those trades. 2 of them are going to back up here and break even, but 1 of them is going to go to the high heavens. In this case, the opposite direction. But made some serious bank on this. We netted out about 3.75R, took the money right about here before the 200 in there, even though our mechanical target says take it right underneath this area. I'm not going to do it. I'm going to go just above the 200. Play number two. Now, we break these down into two different series. Number one, I look at what happens in the first 30 minutes of the market. And when I do those, I'm trading specifically stocks that are either gapping up or gapping down, clean void to the left. That gives me a pattern. It hasn't went too far, hasn't ran, a country mile up 3 times average trading range before it actually, turns at that point. I'm actually looking for them to stagnate, give me maybe a breakout or a breakdown. In the case Johnson & Johnson, we had one little other caveat, and that was the relative weakness along with the strong market, and more importantly, the weak biotech specifically. I look at the other items in like Merck, and they were consuming that as well. So this was going to probably hang out on the low side. The key is finding entry. If I missed and it breaks back out and stops me out, I'll go back in again, but I'll do a quarter of the lot at that point. Never at any time with 2 trades have more than 3/4 of an R exposure on the trade. Now, after 10 o'clock, or right about 10 o'clock, I'll look over here and determine what the numbers are. Do we have consumer sentiment coming out? The JOLT numbers? Is there some job numbers usually is where it is, or consumer sentiment here, or maybe Fed speaker, Powell, or something coming on board. I typically lay back. So step 2 is I start waiting for the 10 o'clock, start identifying stocks that are either relatively strong or relatively weak. In this case, we identified Google down in here. And again, why is that? Well, if you look at the market specifically in here, what was the market doing here at around 10, 12 to 10, 15? It was about 100% lower than it was the high. It was already down 100%. Well, what was Google doing at that point? Number one, tech wasn't selling off quite as hard today as it has been doing. The broader market was selling off. Tech was holding. Biotechs were leading that down along with some of the Dow stocks early on. So what was Google doing? It was holding up. Now I could say, all right, I'm going to take the breakout on the pushback in here, and you would have got sucked in 3 times and probably stopped out all of those. So when you take a breakout late in the day, what happens is you've made such a range that breakout up here at 157.80, now you've got a stop of 156.60. You get down $1.20 to $1.50 stop. What if you can take a third of that stop? So when they pull back, I still want to identify where my Fibonacci's. I drew the Fibonacci line here to here, which was the high at the time, and I identified where my entry was going to be. Typically, I like to be around 38 to 50%, no more than that. My stop is going to be somewhere around 61.8, no more than 75, but typically 61.8. In this case, because I was getting in at demand area. So the pullback here, this is where I got in right there. Well, that pullback, got in right there. Wide range bars ignite on volume tells me that they're going to support that move higher. And it's at VWAP as well. So relative strength working for me. The tech that wasn't being sold off as hard. Google had void to the left, right? And so I'm going to take the next pullback. Now, here's the key. When you're taking pullbacks, you want to make sure that you're getting in. If you don't pull back to quite where you are trying to get in, hadn't be pulled back a nickel or dime before and then shoot up 4, 5, 6R, nothing more frustrating than that. So at some point, maybe you're down to around 3%, 5% of getting in. Go ahead and box the entry in. So what we did, we got down around 10 cents or so. I said, all right, we're going to get in. If it keeps pulling back to 157, we're going to get in at 120. We're going to get in. There's no ands, ifs, or buts in that. The difference is that if we did get in at 120, we're going to have a calculator. We're going to reduce our share size a little bit, keeping our stop the same. So our exposure is never extended because we're getting in a little bit higher. That is the key. Well, lo and behold, it pulled back to 157, got us in, pulled back to 156.74, held around the area, jumped up, beautiful third touch at the top, consolidated, got tighter as the 9 EMA on the 20 kind of 9 EMA on the 2 caught it and fired up here. Again, we were taking some of these things off along the way, got in the trade. We added at 127.25. So keep in mind, when I get in, I'm only at half risk if it doesn't go. If it goes to 157.25, my stops come up, right? Remember, I'm already dealing with a pullback. So I'm not dealing with a breakout that pulls back. A lot of times that'll happen, but I'm dealing with a pullback and then I get in and go up. I expect that to move, that time for it to move, or at least bounce and not go down more, not create a lower high at that level. There was every indication in this that was not going to happen because we were dealing with a relatively strong stocks holding a 38% fib versus a market down here 200% lower. So moved our stop up here respectively to 156.28 to put it, kept our risk the same, went break even on the average entry, which is 157.12, because we got in at 157, we added at 157.25, 157.12 is the average, boom, kept it. We spanked this quarter off at 157.63. We spanked another quarter at 158.50. And then we looked for that back target of 159. Now, it went actually 2 more R beyond that, about 6 R. We took just about 4 R off. As a matter of fact, when it got right up in here, starting to get a little extended, I said, let's go ahead and park this baby back at 75. It came back in here to 26. I said 75, let's take it. Got up here to 81. We took our profits right in here. And very quickly went to what would have been our course. So 3.75 R there, went up 6. The other one went 7 R. What these two stocks went 13 R. The key is, now we got about 7 R of that, is that we get to identify that first 30 minutes of the day. What do we want to spank here? We're looking for breakdowns and breakouts. We're looking for clear void to the left if it's got it, not too extended. However, if they are breaking down or gapping up, and the average daily range, let's say $3, keep in mind, I always live by that average daily range, but when they're gapping above or below into void, go ahead and figure it times 2. Many times those gaps will go 2 times ATR, average trading range, as opposed to being inside of a pocket, not having the freedom gapping up over in there, trapped in shares. So the Johnson went 5 times, so there was no, that was kind of an anomaly there, but this actually did well. This was a great play. We just had to time that entry right in here, and we did. We got in right there, and our stop was right down in here and didn't come up to it. And then the market, we got this thing turn consolidated. We got the spank on the upside, and we had a good market run too. That didn't hurt to have a nice $12 run higher. So great opportunity on the Google and also on the Johnson & Johnson. Again, I like to bring frequency in where I can get in a few more plays, because when we don't, sometimes you end up with a break-even play or a pullback and a stop. So I do like to try to get somewhere around 3 plays ideally. And today we only had 2, but we had great profit on the first one here. It didn't matter what happened in the second. But I want to bring frequency in, because sometimes you can be dead right and just get caught up in a market continuation and lose, and then ultimately going back to where the profit would have been. So, but 3 trades is a great way to break frequency in. Don't be trying to fight that early morning trade on a pullback. Take that breakdown, because that's what it's giving you, my man. Get in there, take that stuff, go break even, follow the method. Again, this thing here is live, front and center. I go through this in detail as we're entering the trade. Which one of these we're playing? We're playing the gray or we're playing the color. The gray is the first 30 minutes, the colors are back 30 minutes, and they're distinctly different. So make sure you understand that. But again, we walk through all that live. As I'm making adjustments, I'm bringing up the chart and mechanical. One thing that does pull some motion off the table. There's no emotion trading one chair. there's an emotion trading $2,000 risk to trade. Okay, and you need to put that aside. You get in a trade, when it hits your mechanical, put the stock aside, move on to something else. Don't fret on that. Go try to bring in frequency in here. This is the first 30 minutes, maybe hour that we spend in our room at Full Throttle Traders. Meanwhile, we have another moderator. We're playing open range breakouts, very specific orders, high win rate in those trades from 10 to 20 minutes. Good success rate, late day, midday, credit spreads, straight options, bull spreads, and a lot more, iron flies. So if you haven't taken the time to check out Full Throttle Traders, it might be in your best interest to do this. I've been doing this for about 25 years. I don't care if you've been doing this for a week. I don't care if you've been doing it for 20 years. You're going to learn something at Full Throttle Traders. Remember, we definitely don't trade what we think. We trade what we see. And that is the key, and that is the difference. And when we know that what candlesticks perform and what they do is the footprints of money. We follow the money, where money ignites from, where money ends, how it deals with moving averages, the ranges of the stocks. The stock patterns is everything. Fundamentals fall way behind when you're looking at the intraday side of the markets. We want to see where stocks can go based on where the technicals are, not where we think that they're oversold or overbought based on fundamentals there. Those are important for longer term trades. I get it. They're all important, but the way that we trade, if you don't know it to that level, join us at Full Throttle Trades for a free trial. Come in and watch me trade live for a couple of weeks on me and just see how we actually flow through this. Stay with us on this. And I think once you're here, you're going to see open your eyes to a whole new level and a learning field of trading. So hope to see you in the room. You guys enjoy the rest of your day.